Alright, alright guys, welcome to Week Ahead, covering 25th to 29th of May. This is the last last trading week of the month. So just like we normally do, depending on the market that concerns. So this is from our S page. So we decided to pull it off from our S page. So we're going to look at the data, the macro data after that tracks to show you some tradable opportunity for the FS guys. So depending on the market you are trading, so you pay attention. We cover all markets as a research based firm. So this is so always go to our S page to download these graphics and catch up in real time what is happening. This is the handle of our S page, @_invest, so you can catch up, follow up and stuff like that. Engage with us, because we are not always on YouTube, but we're always on X. So for previous week, so some of the few things that happened the previous week for the macro data and stuff like that, because of you see as the UK inflation dropped. So you'd be wondering why did inflation drop in the UK if you compare it with other economics, other countries of the world. One thing is that there was a price cap on energy price cap. So the gasoline price hitting the home and the electricity hitting the home was capped by the US government. So that means those businesses were eating up. It was eating up in those business margins. So it didn't translate down. So it's a kind of protection mechanism. But how long can it hold? That is the next question. So that's helped to cushion inflation. So for this energy crisis, the UK recorded a lower inflation of 2.8%. Then in Australia, the labour market weakened. So the labour market has been printing within the handle of 4.3%. Was as at last week, it valued to 4.5%, which was beyond every expectation. So it led to a repricing in Aussie related assets and currency. Then for Japan, interestingly, there was a growth in there was addition in their growth, but the inflation in Japan weakened back to 1.4% as a result of government subsidy. Governments have been subsidizing some of it. So that's why the part 3 effect from the energy crisis didn't hit them. So that is a major economy now so UK, Japan now, they are being shielded from the pass-through effects. Then in the US, nothing really happened, just like officially Kevin Walsh was sworn in he's now the Fed chair, and his swearing ceremony was done in the White House, a kind of grand opening, stuff like that. Trump and his own thing. And very importantly, Trump retweeted that Kevin should do his own thing, he's independent and stuff like that. Then for the Nigerian, there is CBN, Nigerian CBN, the NPC arm of the Nigerian CBN held rate at 26.5%, and they also alluded to the ongoing energy crisis, which, if you check the inflation data per week, it ticked up. So they had no other reason than to hold rate. Then finally, Nvidia earning beat expectation, and the AI love affair continues. So when for this week, you look at the bond market. So the woke up. The woke up, you see major bonds hitting the gilt, the boom, the US 10-year. Every US 10-year at a point was printing at 4.6 handle, and you see the gilt printing above 5 points. But a lot of things was pricing into that gilt. Both the political turmoil and the energy prices, expectation of inflationary pressure, expecting that the central bankers. So it was more for the UK. It was more of a discipline the physical side. You see that with the political turmoil, you see the Birmingham, which is expected if he wins the by-election to replace Palmer. You see him coming back to walk back that talk, because the market at the point thought that he will be physically irresponsible, but he walked back that talk that they're gonna do it great. So that is watch out. So the bond vigilantes, they are awake and watching. Then for this week macros, so we are expecting GDP data from the US. The last print was at 2%, so we are expecting data. Then Canada too is an interesting one to watch, because in Canada the last print was at minus 0.2%. So if we have a consecutive points over time, and we build slow down in the labor market, the terroristic labor market, then we can officially say that Canada is headed for a recession. So that's why all eye on that data to see if it's gonna reverse and see how conservative it's gonna be in line with the labor market. Then for the Australia, we are gonna have the inflation data. The last inflation data point at 4.5%, right? Yes, 4.5%. So all eye on that to see, because once this inflation data start keep ticking up, then the RBA, we know, since they are already hawkish, so if you support their hawkish too. Then for the New Zealand, we are going to have the rate decision from the RBNZ. So the body language is that they are going to hold as they watch the inflection effect from the energy crisis. Then second to the last, in Japan, we are going to have the unemployment data. Current unemployment in Japan is currently at 2.7%. So if you evaluate it with the inflation that is below even their target of 2%, you see that it is generally affecting what the BOJ will do. So kind of that's why the hockey stand BOJ wants to stand up. The data are not really supporting it. The Fed are not really supporting it, and the physical side are not even helping market. Then finally, Nigeria, we are going to see their report from CBN, the FX reserve, which is currently at roughly 49 billion US dollars. So we're going to see if the first money guys are withdrawing their money due to the energy crisis. So that's all about the macro for the week. So it's a light data packed week. Then for the for the equity, you know, we cover the Nigerian market and the US market. So SpaceX IPO is coming on board as soon as next month, if possible, when the SC approved it is coming on board. Then Dangote Refinery somehow is coming within, let's say, September. That's from the last report we got. So all eye on that. That is what is doing, is leaning in the equity market. There are still opportunity both in the US market and the Nigerian market. Always watch our analysis if you are an equity person. We break down companies' reports on our YouTube channel or our X, so you catch up where opportunities are in the market. Then finally, for the geopolitical, as we are recording correctly, US and Iran, for the geopolitics, US and Iran, they are having a peace talk. So they are having a peace talk. It might not actually, the sticky talk still remains around that, around the streets of Hormuz, one, the blockade, and finally, nuclear weapon, those enriched uranium. So I think, so we just pour eye on that, but the peace talk is going, which might, if the market opens and it fails through, some assets is going to react to it. If it goes through, the old playbooks continues. Then finally, UK political turmoil, all eye on that and see how it all pans out. Each time is gonna whether a winner and come out when the by-election holds. So for the chart, let's just go to the chart and look at some of the FX play. So for the currency guys, yes, for the currency guys. So as at last since this month we have, okay, it's loading up. So for the currency guys, remember here we have our currency deck. So for the currency guys, there's some opportunities from the currency market, just like in the equity market. There are some opportunities in the equity market from an investment point of view. Then for the currency guys, is holding. This month we had only three tradable opportunity. The first one was on Australian dollar, Canadian dollar, which we bought some Aussie. We bought some Aussie this month. The second trade we had was when we sold the New Zealand using the Swiss franc after overlaying the macro data, then which went through too. Then the last one, second to the last trade we had is the New Zealand Canadian dollar. So we are buying, but we closed it out on a partial loss. So far we have had 2 wins and 1 loss. So the trade we want to take, the opening trade we want to take as the week comes by is we are going to look at selling. We're going to look for selling opportunities. If you know how to trade currencies, for the currency side, we are going to look at selling the euro. Yeah, we want to look at selling the euro with the US dollar. So we are looking for selling opportunity. We are looking at selling opportunity on that if you find the opportunity. But this is the chart. So it's loading up. So as the market is opening, chances are due to the P stop. So if it goes through, you might see a gap on euro. You might see it because you know that all this while the play has been, this war has been positive somehow for the dollar. So whenever you see a de-escalation, that is just so if there is a de-escalation, the market might open up for more final entry this week. So euro USD is on our rate. Okay, sorry about that. So since we had it hanged out, so we said we are looking to sell the euro. Yeah, euro USD. We'll be looking for a sell. So if the market opens, we might see a gap. Market reacting to the positive new gap to the upside because of the play. You know, if there's the escalation, you see the dollar dropping a bit and other asset getting, for whatever reason, that has been the play. You have been observing the back and forth in this, but overall we are looking for a sell. So these are some of the trades on our radar. We'll be looking for opportunity around this Aussie card and the rest as the market evolves. So you deploy, if you know how to trade currency, you can deploy your favorite technical entry strategy. Use the buyers and look for opportunities. AUD card, we'll be looking for a buy if the opportunity comes. Very important if it comes, because you might be macro fundamentally ready, but the technical levels, which is the entry, which is the demand, if it doesn't come, you have to wait. So these are the biases. NZD card, NZD check, we are still looking for a sell. Euro check, we are still looking for a sell. Card check, we are still looking for it. Thus, we are bullish on the check, pairing it with all these currencies, apart from all these ones you are seeing here. GDP check too, looking for a sell. Then NZD card, we're still looking. If we find a buying opportunity, we're gonna buy. Euro AED, looking for a sell. Euro NZ, we are looking for a sell, and USD card, we are looking for a buy. So these are so you just overlay your technicals and start looking for opportunity. Possibly at a higher time frame, you will find those levels that hold on a higher time frame. It tends to play out with these biases. So for the equity side of things, there are still opportunity in the Nigerian market currently. Nigerian market has done over 60-something% year to date. There are still opportunities. There are still undervalued stocks. Just if you know how to do the valuations, which we do for free and post on YouTube here, you see it on our X. We look into the numbers of this company, then do the valuation to find the intrinsic value of this company. The same thing in US market too. US market has done over 8 to 9% year to date. There are still on the opportunities. Even aside your AI rhetoric, there are still opportunities. So trade safely, depending on the market you trade. Wishing you a profitable trading week. Also, remember to give us a follow on X. Subscribe to the channel, comment, and see you on the next one. Peace.